Welcome back to the deep dive. Today we're cracking open the story of a real giant, the State Bank of India. We'll be sifting through, a decade of its journey, FY 2015 to FY 2025, looking at how it's changed. It's more than just a bank, right? It feels foundational. So with all this info you've pulled together, what's our main goal here? What are we trying to sort of extract?
Yeah, exactly. The aim is to really get to the core insights, move beyond just the surface numbers and understand the big strategic shifts, maybe some surprising facts that show where SBI stands, globally. We'll look at its sheer size, how its finances have evolved quite dramatically, actually, and what it implies.
Okay, sounds great. Let's start with that scale then, because big doesn't quite seem to cover it for SBI, does it? How big are we really talking?
Oh, it's genuinely immense. Think about this. It's India's largest bank, hands down. It holds something like 23% market share by assets.
23%, wow.
Yeah, and 25% of all the loans and deposits in the country. That's massive. They're serving over 520 million customers, 52 crore, through nearly, almost 23,000 branches.
Incredible reach.
It is. And it's even the 10th largest employer in India. Plus, its history goes way back to 1806. It's the oldest commercial bank in the whole subcontinent.
Okay, that kind of scale and history is just, well, mind-boggling. You'd almost expect an institution like that to be a bit, maybe, slow-moving. But the figures you shared point to a really impressive financial turnaround. What's the headline there?
Well, that's exactly where it gets fascinating, actually. Despite that huge size, SBI has shown this remarkable improvement in financial health. Probably the biggest thing is asset quality. The gross non-performing assets, the GNPA, basically bad loans, it dropped hugely from 4.25% back in FY15 down to a record low of 1.82% in FY25.
That's a huge drop.
It is, and the net NTAs are down to just 0.47%. This isn't just cleaning up the books, it signals really rigorous risk management. And that directly feeds profitability. Net profit just soared from around 13,000 crore to nearly all 71,000 crore.
So 71,000 crore.
Yep. And the return on equity, ROE, that key measure of efficiency, it jumped up significantly to almost 20% by FY25. Basically, with less money stuck covering bad loans, they can push for growth much more aggressively. It fundamentally changes their risk profile.
Right. So it's not just bigger profits. It's a healthier, more efficient operation underneath. But, banking is changing so fast with digital. How does a giant traditional player like SBI adapt? Are they keeping up?
Well, that's their powerful ace up the sleeve. You're right. Their core net interest margin, the NIM, it did face some pressure, dropped to 2.9% in FY25, mostly because funding got more expensive. But SBI has really leaned into digital transformation. Now get this. They have over 500 million accounts, right? But only about 14% use their main digital app, UNO.
Only 14%? That seems low.
It does. But here's the kicker. That relatively small group of digital users, they generated a huge chunk of SBI's record profits last year, USD 9.2 billion. It just highlights how much cheaper it is to serve digital customers. And that's key for SBI's strategy to, try and close that valuation gap with the private banks like HDFC or ICICI.
Wow, okay, that cost to serve difference is a real potential game changer then. So from an investor viewpoint, how's all this played out in the stock market? And you mentioned something surprising about the charts.
Yeah, performance-wise, SBI has done pretty well, a return of about 204% over the last 10 years. That actually beats both the main Sensex index and the BankX index.
Better than the market, okay.
Right. But here's the crucial bit, the thing many people miss. There was a stock split back on November 22, 2014. The face value changed from 10 euro down to 1 ARD per share. If you just look at a price chart without adjusting for that split, your conclusions about historical performance would be completely wrong. It makes the return look much smaller than it actually was.
Okay, that's a classic gotcha, isn't it?
Yeah.
A good reminder to always dig deeper than the surface chart. Speaking of digging deeper, let's talk about something really unique to SBI, its ownership. The government of India is the majority stakeholder. How does that affect things day to day?
It's definitely a bit of a double-edged sword, you could say.
Yeah.
Having the government hold a majority stake, about 57.4%, gives it this implicit backing. We saw that clearly when they stepped in during the Yes Bank crisis.
Right, a safety net.
Exactly, a big safety net, which provides a margin of safety for investors too. But on the other hand, that structure can bring challenges. There are those historical perceptions, maybe, of bureaucratic slowness, and sometimes recurring compliance issues pop up, like that recent penalty from the RBI in May 2025 for not following certain directives. It just shows the sheer complexity of running such a huge, systemically vital institution.
So, yeah, both stability and maybe some operational hurdles.
Mm.
Given all that, the turnaround, the digital push, this unique ownership, how does SBI look if we put on, say, a Benjamin Graham value investing hat?
Well, applying those kinds of value investing principles, SBI actually looks fairly valued, maybe even potentially undervalued. You've got consistent earnings growth, that strong financial health we talked about, its dominant position in the market, plus that government backing. It all adds up to a significant margin of safety. And that's even when you factor in the so-called public sector discount. The tendency for markets to value government-owned firms a bit lower than private ones, maybe due to perceived inefficiencies.
Okay, interesting. So wrapping this up for our listeners, what's the big takeaway here? We've seen SBI go from just being massive and stable to being, well, fundamentally strong with a real digital future and that amazing asset quality turnaround.
Absolutely. And maybe here's a final thought for you to mull over. As SBI keeps pushing on this digital path and expanding globally, how might its journey not just reshape banking in India, but maybe even challenge some of those old ideas about how agile or how efficient a public sector company can actually be on the world stage?